Okay, so Emerita is involved with developing potentially two advanced projects in Spain. Okay, so we have the two projects. Iberia Belt West is the first one. We have 100% of this project, and we acquired it last year after a very lengthy title dispute. It went all the way to the Supreme Court of Spain with a kind of a major on the other side of the dispute. But we have it 100% now, and that's certainly what's reflected in our share performance over the past year. The drilling is begun on this very high-grade deposit. It's in Huelva province. Both of the properties that I speak to are in the Iberia Pyrite Belt, which is a volcanogenic massive sulfide terrain, probably the most prolific one in the world, in fact, with well over 2 billion tons of VMS deposits historically. And the second one is Aznalcollar, which is pending a legal dispute, which we expect to be resolved really any time. That's also been about 7 years in the courts, and we have won all of the appeals, and it's basically at the end of the process. And I'll talk a little bit more about that in detail when we get to that project. In terms of the company, my background, I spent over 20 years in the Noranda Falconbridge organization. So these types of deposits, volcanogenic massive deposits, are our bread and butter, basically. I was the global exploration manager for Falconbridge when it was taken over by Xstrata. So in that role, I was involved in not just the greenfields exploration, but also responsible for all the mine site exploration and the new projects. And I was on the operating team that made the capital decisions for any new mining projects. So we know these projects well. Joaquin Marino, our president, is a Spaniard based in Spain, but he's worked all over the world. He's also a PGO. His master's degree is from Queen's University. Very good experience at the CFO corporate secretary level. And Larry Guy, who is our chairman, who I think is also online here, and our other directors bring a wealth of capital markets experience. Larry is a founding partner, or was a founding partner of Purpose Investments, which many of you would have seen if you fly on Air Canada. In terms of the capital structure, we have about 150 million shares outstanding. Warrants and options are in the money. The treasury, we're around $8 million right now, and the warrants and options represent about another 8.5 million that would be available. So we're in very good shape financially. The initial drill program that we've laid out on Iberia Belt West is only about $800,000. So the projects that I mentioned are the two in the south, the red dots on this map. We're in very good company in this area. The closest operation to Iberia Belt West, which is the one on the Portuguese border there on the left, is actually the Neves Corvo deposit of Londin. But also we've got Traffic Euro with the Aguastinides operations, First Quantum in that area. Active juniors would be Adelaide out of the UK and Pan Global out of Canada. It's an active area, and on top of those operators, we've got Rio Tinto still has a copper smelter, and of course Glencore has a zinc smelter in the north of Spain. So in terms of infrastructure, you really couldn't be in a much better location. You can drive to the properties in a car, essentially. There's a lot of mining infrastructure, every type of contractor that you would need in this region for doing this type of work. There's a very good mining culture and very good support for the industry in the region. And in fact, the junta in Andalusia recently passed a resolution making underground mining in the region a priority economic activity as they come out of COVID. And about a week following that, so this is only about a month and a half ago, the European Union announced 3.5 billion euros to support mining and metallurgical projects in this very small area. And that of course is very important because it really makes a statement about the importance of this sector to that economy. It's also part of that statement is the fact that these projects will be permitted. Obviously, if they have to be done properly, but they will be permitted. And from the European Union perspective, they recognize that they are hugely dependent on materials coming from outside of the EU, and they want to they want a better security of supply. So, just to point out, I guess the projects that we're talking about, Paimogo on which is Iberia Belt West now on the Portugal border, Neves Corvo, which is Lundin's operation, Aguas Tenidas, which is the Trafigura operation in this area, First Quantum, Las Cruces over here, and then a number of others. The famous Rio Tinto deposit where Adelaide is, of course, in between. An extremely well mineralized area. And many, many other deposits in the region. So our property at Iberia Belt West, it hosts 3 deposits already, two for which we have data. So the Romanera and Infanta we have data for. Alquiro, we don't have the actual drill hole data from the historical work, but we do have some information. There is a shaft there from historical mining. But what we like about Infanta, what really excites us, and this is where we're starting the drilling, it's extremely high grade. It's at surface. It was drilled by Phelps Dodge in the 1980s. At that time, they had a very small land position, a postage stamp, really. So they only drilled it to about 110 meters depth because it dipped off the property at that point. And similarly, along strike, they drilled about 400 meters of strike length, and it went off the property. So that project, that deposit is very high grade, as you'll see in the next slide, and wide open for expansion. The other one, Romanera, is much larger. You can see that the work there historically was done initially by Asturiana de Zinc in the 60s, I believe, and then Rio Tinto in the 80s. Rio Tinto, so these are not 43101 qualified resources. These are historical resources calculated by Rio Tinto. So at Romanera, there's a 34 million ton resource, of which there's 11 million tons that we're focused on. That's higher grade, but because we view these as ramp access underground operations as opposed to the open pits, which would have been considered in the past. And there's a number of reasons for that. It lowers the capital because you're not building such a large plant to produce a lot of low grade. You produce a lot less tailings, much smaller footprint, no big waste piles, because they're really not well designed for open pits, these deposits. They have terrible stripping ratios. So the margins are much higher by going underground and the capital lower. So just to talk a little bit about La Infanta, this deposit already has about, we have data for 49 drill holes into this deposit, so there's not a lot of mystery here, but when you look down the copper column, for example, you can see values in the 2 to 4% copper range. The zinc column, you're seeing values in the 10 to 20 and upwards, as high as 30% zinc. Very high lead grades, very high silver grades. Silver is ranging typically between about 150 to 350 grams per ton in this deposit. And as I mentioned, it's only been drilled over a relatively small area because it dipped off the property at that time. We were awarded this property through a public tender process, which is the first time all of these deposits have been put into this consolidated property, where we have now got a very good land position. The land position extends about 18 kilometers from east to west here, so we will not have those issues that Phelps Dodge would have had in the past. Just a section, again, it's very shallow drilling to start with, but you can see drill holes there of 5.3 meters grading, 200 grams per ton silver with almost 4% copper and 24% zinc. That is the expectation for the initial intersections that we'll be delivering in about a month's time, and when we get the first assays from this drill program. Romanera, as I mentioned, is on the other side of the property, about 8 kilometers away. So from a development perspective, you would be looking at one mill and trucking, from one deposit over to the other. They're very, very close, close enough to do that. Romanera is a much larger system, as mentioned, 34 million tons. It's also wide open. We also have about 50 holes in this one. So again, it's very well understood. It was drilled to about 350 meters depth. On that section, you see the deepest hole there. It's still more than 20 meters thick in that hole. So a lot of room for upside. We look at the 11 million tons of higher grade. It can also grow. And interestingly, with this deposit, it is very precious metal rich. And the precious metals were not really given much value in the past when this work was done, to the extent when Astoria and the zinc did their drilling, they didn't even assay for gold. So we have to re-drill parts of this deposit, obviously. But if you look at the gold column here, you can see there's a lot of very elevated values. In some cases, there's surface enrichment with the shallower ones because we're in some gaussness material in the top part of the deposit. But notwithstanding that, it is definitely elevated in both gold and silver. And when we look at the 11 million ton resource at the bottom of the slide, it shows 64 grams per ton silver, 1 gram per ton gold. We believe it should be somewhat higher than that, in that the holes that weren't assayed, of course, were just those values were put in as zero. So we think we can actually add to the tonnage of this deposit almost without drilling a hole, just by looking at the polymetallic nature of the project. When Rio Tinto did this resource, they did just a simple lead plus zinc for their cutoff grade. So a lot of upside here. And then the Alcura deposit, which is the third one, it's actually about halfway in between these two. This property reminds me a lot of the Matagami South Flank, where I've spent quite a bit of time, where you have a number of deposits along a time horizon there. Alcura is about halfway in between. Like I said, we don't have data, but it was actually mined about a century ago, which would suggest it's probably copper rich, because at that time zinc was not that important a commodity. Everything was about copper and precious metals. The other project that we're working on and that we expect to receive, and really this would be a huge game changer for us, is the Aznalcollar project. This was a very complex public tender about 7 years ago now. We did about $1 million because it required a full mine plan. It was a past producer. It was in operation for about 1.5 years and was closed due to a tailings collapse and subsequent low metal prices. The government took it back, reclaimed it, and then it was put out to public tender for redevelopment due to lobbying from the communities. It was a large, sort of 70 million ton open pit type resource with a very bad strip ratio. But what we are focused on, and we've done our own modeling on this, of course, is the 20 to 30 million tons of high grade that's there, and it would be a ramp access. And again, this reduces the footprint. You would be using paste backfill in the mining, and also there are already 2 large open pits on the project, so you actually can use the original open pit for the remainder of the tailings. So this is a project that will go very quickly to feasibility. It would have to require some drilling to bring it up to 43-101 standards, but it was drilled as a reserve and in production. As I said, it was only in production for about 1.5 years, and when the accident occurred, so the bulk of the ore body is still there. We are very convinced, and certainly the courts have agreed with us, that we should have won this public tender, but it was awarded to a local company. And through numerous appeals, and so we actually went to the police on this and filed a corruption charge against the panel. And the important thing about that is that the laws in Spain are very, very clear, and we've seen that also at IBW. If there's a commission of a crime and awarding a public tender, that bid must be disqualified and it must go to the next highest bidder. We're the only other qualified bidder in this tender, as it turns out. So there's no mystery about where this project will end up. And we're in the final stage. The last appeal was denied about 2 months ago now, and really it's just now sentencing. And once the crime is fully established, the tender process will take over, and this should come to us. So this is a model of the deposit, and it's really a fantastic property and one that is truly world class in my view. The 20 million tons that I refer to is the number of the previous operator. It was pit constrained. If you look at the model, all of that resides within the middle lens here, the Los Frailes deposit. The original open pit, however, is the lens that you see that appears in the hanging wall. It's actually a long strike. That's the Aznalcollar deposit, and there remains, based on the historical information, 90 million tons there. It's a lower grade, more copper-rich, lower in lead zinc. But of that 90 million tons, there's probably close to 40 million tons that you could ramp over and actually develop from the same underground workings. The third deposit that you see here is just a zone at this point. It doesn't even have a name, and it's actually in between the two. And it's just an area when we were doing the compilation where you can see there were a number of high-grade holes similar to what you see on Los Frailes, which is the central lens. So that's an area, again, where you would have to do the drilling, but you could certainly develop another resource in between these two deposits. So this is really, a fantastic property in that you've got 20 to 30 million tons at Los Frailes that we've done the study on. You've got potentially another 40 million tons that you could ramp over. That is drilled in detail on the original Aznalcollar deposit. And Los Frailes is wide open at depth. If you look at the section here, this is the outline of the open pit up in this area. The deepest hole is about 300 meters below the pit, and it's still more than 40 meters thick at the deepest hole. So you can easily see this thing going from, say, 20 to 30 million tons to, it's only a few more sections down dip, and you would be a 50% increase in the tonnage that's available there. So, and the thing is, once you go with an underground option, you have access to all of that upside. So it's a much better approach to development. Again, this had a very high strip ratio, and it was going to get higher as they go deeper. We don't have to deal with that. It will be a smaller mill, lower capital, much smaller environmental footprint, because again, you would be using paste backfill underground as well as the balance of the tailings you would be able to deposit in the original pit. And our shameless promotional slide, just to remind you, so at Aznalcollar, there could be 20 million tons at Los Frailes, and then the other 40 million tons basically within 350 meters of surface. At IBW, there's 11 million tons in Romanera, just Romanera, that's well drilled off. We haven't put any tonnage in there for the Infanta deposit, but we will, and it'll be very high grade. We expect. The most important transaction probably in this commodity space, it has been the Arizona mining one, which was taken over by South 32 for 2.1 billion Canadian in cash in 2018 in the summer. When we look at their deposit, they have in their feasibility over 100 million tons, but this is not a deposit that's in production. It's not fully permitted yet. It's world class, no question about it, and it will get a lot bigger, and that's why the valuation on it. And I'm not going to suggest we're going to get that kind of valuation here, But these are the scale of assets that get us at least into that conversation, particularly with Aznalcollar. But we could easily see a combined tonnage that grows to a value close to that with better grades and shallower depths. So that's why we're still highly enthusiastic about where this company can go in the coming year. Just to summarize, 100% ownership on Iberia Belt West. We've got the drills turning. I highlighted this next bullet because there was a question emailed about the European Union. So they have allocated this $3.5 billion fund for supporting mining and metallurgical projects in Andalusia region. And the question was, would we be eligible to access it? My understanding is that program starts next year, 2022 to 2027. It's a 5-year commitment. It's going to be for advanced projects. So I think for something like Iberia Belt West, we would need to get it to PEA, which we should be probably doing by the first quarter of next year, if not a bit sooner. We don't have a ton of drilling to get to that stage because we have more than 100 holes already to build on. So it is feasible that we could be there starting it this year. But that, I think you would have to at least get to that stage before you would be qualified for that money. What I think is most important for us at this point is the whole push for mining and metals in the region. It really sets the tone. It sets the tone with the regulators that this is an important sector. The communities are anxious to see the activity. So it just creates a very positive business environment in which to be running projects right now. So I think those are the key points. You can see our website there. I put this other website down below, Dr. Jones Resource Investor. This is not someone that we pay but he has become a large investor and a big booster to the company. And he does a lot of independent research, some of which is, I would say, very, very bullish, but also he just lays the data out there. I think as an investor would like to see it more so than maybe someone like myself with a geological background would. So if you really do have an interest, there's a lot of good information that he has dug up, and you can make your own decisions, of course, based on that.